Welcome to the third part of inheritance tax. Again, we have to practice a question in which the individual has transferred gift during his lifetime and then within 7 years he died. So, this is again a illustration from the Kaplan study text. On 15 July 2015, Sanvi made a transfer of 3,65,000 into a trust. She had made no other lifetime transfer. The IST due in respect of this gift was paid by Sanvi. Sanvi died on 30th May 2022. The nil rate band for 2015-16 is 325. Calculate the IST arising on Sanvi's lifetime gift and the additional IST arising as a result of her death. So remember one point we have considered earlier. This is the point that additional tax may become payable if the donor dies within 7 years of making CLT. If the donor has transferred some chargeable lifetime transfer during his life and then within 7 years if the donor dies, then it might be possible that additional tax become payable. So how it is to be payable? If the lifetime charge is 8,000 and at that death the charge calculated is 10,000, then additional 2,000 amount has to be paid. So this is what we have to consider in the question of Sanvi. So first we have to start the calculation in accordance with format. First, the date of gift is given as 15 July 2015. The date of gift is 15th July 2015. So it means the tax year is 1516. Tax year is 1516. Now you have to mention the transfer of value, and as it is the only gift, that is why the presentation is easy here. Transfer of value. The transfer of value, the gift has a value of 3,65,000. So 3,65,000 is the value of gift. Now you have to consider the annual exempt amount of current year. The current year annual exempt amount is 3,000, and then as there is a only gift made by Sanvi, there is no gift that is transferred in the previous year. So it means previous year annual exempt amount is also available. So this 3,000 also has to be deducted to arrive at a chargeable amount, which is 3,59,000. Chargeable amount is 3,59,000. Now you have to consider what is the nil rate band, because this is the gift to trust. As this is a gift to trust, first we have to mention that this is chargeable lifetime transfer. And if it is a chargeable lifetime transfer, we have to apply the nil rate band. The nil rate band is 3,25,000, which is to be mentioned here in inner column. Now according to full format, we have to mention that whether this nil rate band has been utilized in previous 7 years, utilization in 7 years before or in previous 7 years. No nil rate band has been utilized in previous 7 years. So the whole nil rate band of 3,25,000 is available, which reduced the chargeable amount to 34,000. This is said to be the taxable amount. Remember, no doubt the individual has died, but first we have to calculate the tax liability during his lifetime transfer on the chargeable lifetime transfer. So it is 34,000 who is agreed to pay the tax. The IST due in respect of this gift was paid by Sanvi. So as Sanvi has to pay that tax, means donor has to pay that tax. So it means the rate of tax is 25%. IST payable during lifetime. So it is 25% of 34,000, so it will be 8,500. 8,500 is IST payable during lifetime. Now we have to mention who has to pay that. Payable by, as in the question we have been given that it is to be paid by donor, means Sanvi, so we have to write the name of Sanvi. Due date, what is said to be the due date? The date of gift is given to you as 15 July 2015. So remember that if the date of gift is between 6th April to 30th September, if the date of gift is between 6th April to 30th September, then the due date will be following 30th April. So 30th April 2016 would be the due date. Now we have to consider the gross chargeable amount, and as the donor has paid the tax, we have to add the amount of tax in the chargeable amount. So chargeable amount is 3,59,000 and the tax is 8,500. So sum of this is said to be the gross chargeable amount, which would be 3,67,500. So this is the first part of the question, that we have calculated what is the tax payable during the lifetime and what is the gross chargeable amount. So in the previous question we have considered that if it is potential exempt transfer and the individual has died within 7 years of date of gift, then the potential exempt transfer become chargeable. But in this example the situation is different. In this example the gift is not potential exempt transfer, it is already chargeable lifetime transfer. So what we have to do? We have to again calculate the tax at the date of his death and consider that whether the tax liability increases or decreases. This is the point we have to consider. So a small situation is changed, otherwise the question is quite similar to the previous one, but due to this small change there is a change in the pattern of calculation. On the date of his death, we have to again calculate the tax, inheritance tax, and rate applicable is 40%. We have to consider the taper relief, but remember that on the date of death we have to consider from the gross chargeable amount, and the gross chargeable amount is calculated during lifetime, and that is 3,67,500. Remember, if you have to calculate the tax on the death of the individual, you don't have to apply the annual exempt amount. You don't have to apply the annual exempt amount, whether this transfer is potential exempt transfer that now become chargeable, or whether this transfer is already chargeable lifetime transfer, and now we have to again calculate the inheritance tax on the date of death. So we have to apply the nil rate band. On this gross chargeable amount, we have to apply the nil rate band. Again, it needs to be mentioned that nil rate band is 3,25,000, and what is the amount of nil rate band that has been utilized in previous 7 years? Utilization of nil rate band in previous 7 years. So it is nil, there is no utilization of nil rate band in previous 7 years. So it means that the whole 3,25,000 of nil rate band is applicable. So it will reduce the amount to 42,500. Remember, on this amount the tax liability is to be calculated, and that is at the rate of 40%. So this is taxable amount, and the IST payable on death, and that would be 40% of 42,500. So that is 17,000. Then we have to deduct the taper relief, And for taper relief, we have to consider the date of gift and the date of death and the period between that. Date of gift is 15th July 2015. 15 July 2015 is the date of gift. So from this to date of death, which is mentioned as 30th May 2022. So it is a period of 16, 17, 18, 19, 20, 21, and before 22 of 15 July, that person has expired. So it is a period of 6 to 7 years after the date of gift. So taper relief that is to be applied is 80%. 80% is to be applied as the date of transfer to date of death. This is the period in between 6 to 7 years. So 17 8s are 136. So it is a 13,600, which is said to be the relief. So due to this relief, the amount of tax would reduce to only 3,400. That is the IST payable on the death, which is also known to be as death tax. Now we have to consider what is the amount that has already been paid as tax. The amount already paid as tax is 8,500. So already that person has paid tax of 8,500. So remember that if there is additional tax, you have to pay the additional tax. But if already amount of tax that has already been paid during the lifetime is greater than the death tax, then there is no refund. No amount is refunded. This is said to be IST during lifetime, and this is IST payable on death. For example, now if you consider, let's for example, that the amount of tax already paid is 3,000. Instead of 8,500, it was if 3,000, then we have to pay 400 as additional tax liability. But as the amount that is payable during the lifetime is greater than the amount that is payable on death, there is no refund. This is the point to remember. Our next question is charbel. That is again an important question, a detailed question, where we have to consider all these things in detail. Important one, charbel made the following lifetime gifts. Nil rate band was 3,25,000. It was given to us. On 1st September 2012, 3,15,000 to our trust, and at that time the nil rate band is 3,25,000. On 1st May 2016, the gift is 2,63,000, and again the nil rate band at that date is 3,25,000. On 1st June 17, the gift is to trust again, and the gift is for 2,36,000, and also the nil rate band is 3,25,000. Now, July 19, the gift is for 21,000 to his daughter Jane. At that date, again the nil rate band is 3,25,000. And last, the gift is made on 1st August 2020. Gift is for 1,03,000 to a trust. Again, the nil rate band at that date is 3,25,000. Charbel had agreed to pay any IST due on CLTs. Means it is the donor that has to pay the tax. Charbel died on 1st December 2022. Calculate the IST payable on the lifetime transfer during Charbel's lifetime, and then IST payable on his death. State who will pay the tax and the due date of payment. So who will pay the tax? It is the Charbel every time who has to pay the tax. And there are now how many gifts? 1, 2, 3, 4, 5. So we have to draw a format for 5 gifts. So first we have to mention the first gift. First gift is on 1st September 2012. The gift is for 3,15,000 to a trust. So it is 1st September 2012. First it is CLT. It is CLT. Date of gift is given as 1st September 2012. So the tax year is 1213. So we have to mention here the transfer of value for 2000 for the first gift. The gift is for 3,15,000. First we have to deduct the annual exempt amount, and that is for the current year, and this is 3,000. Then as there is no gift in the previous year, so previous year annual exempt amount is to be deducted, and now you have the chargeable amount, and that is for 3,09,000. A very important question, because you have to consider the application of nil rate band in this question. This is the most important thing. Then as it is a nil rate band, so we have to apply the as it is a chargeable lifetime transfer, so we have to apply the nil rate band. Nil rate band is 3,25,000. Nil rate band used in previous years, previous 7 years. So in previous 7 years there is no nil rate band that is utilized. So whole nil rate band of 3,25,000 is available for utilization. So as we have some more gifts, so that is why we will take 3 or 4 line gaps and record the 3,25,000 of nil rate band that is available. Now consider the amount of gift. The chargeable amount is 3,09,000, while the nil rate band applicable is 3,25,000. So due to more nil rate band available, so that is why there is no need, there is no taxable amount. Taxable amount is nil. Is 0. So if there is 0 taxable amount, there is no IST to be paid, there is no need to mention who has to pay that tax, and there is no need to mention the due date, only we have to mention the gross chargeable amount. There is no IST payable, there is no need to mention who is to pay that, paid by, but it is in the format, you have to write this. And third thing, the due date, and fourth thing is gross chargeable amount. And that is same for chargeable amount, means 3,09,000. So this is for the first gift that we have to consider. Again, see that 3,15,000 is a transfer of value. Annual exempt amount of current year is 3,000. Annual exempt amount of previous year is 3,000 available. So it reduces the amount to 3,09,000. So chargeable amount is 3,09,000. Nil rate band is to be mentioned here on the left hand side, and used in previous 7 years. There is no nil rate band that is used in previous 7 years. So 3,25,000 of nil rate band available. So this is known to be nil rate band available. So 3,25,000 of nil rate band is available. Taxable amount is 0. There is no IST payable. No need to mention who has to pay it because there is no tax. No need to mention the due date. The gross chargeable amount is 3,09,000. Now we have to consider the second gift. The second gift is on 1st May 2016, and the gift is 2,63,000 to his son. So it means this is the potential exempt transfer. First we have to mention the potential exempt transfer. The date of gift is 1st May 2016. So first we have to consider the tax year, which is 1617, Again we have to mention the transfer of value. Transfer of value is given to us as 2,63,000. This one, the gift, 2,63,000. So from this 2,63,000 we have to deduct the annual exempt amount of current year as well as annual exempt amount of previous year. So it will reduce it to 2,57,000. This is said to be the chargeable amount. And as this is a potential exempt transfer, there is no need to apply the nil rate band. There is no need to apply the nil rate band. So the taxable amount is said to be 0, and again no tax is payable, no need to mention who is to pay it by, no need to mention the due date, only we have to mention the gross chargeable amount, which is 2,57,000. So this is about the second gift. Now about the third gift. The third gift is on 1st June 17 to a trust. The amount of gift is 2,36,000. So as it is gift to a trust, so it is known to be chargeable lifetime transfer. The date of gift is mentioned here 1st June 2017. So if it is 1st June 2017, so it means the tax year is 17-18. The amount of gift is given to you as 2,36,000. The amount of gift is 2,36,000. So we need to mention this 2,36,000. Now you have to deduct the current year annual exempt amount, but there is no unused annual exempt amount of previous year because previous year's annual exempt amount has been utilized here. So the chargeable amount would be 2,33,000. Nil rate band is for 3,25,000, but in previous 7 year, because this is the date of gift 1st June 2017. So we have to consider from 1st June 10, whether we have made any gift. So answer is yes, we have made a chargeable lifetime transfer on 1st September 2012, and here we have utilized the nil rate band. Now question is, how much nil rate band has been utilized? It is said to be the gross amount that we need to consider. The gross amount in the year of utilization of nil rate band, that is to be considered. So it is 3,09,000 of gross amount that is already used. So nil rate band available is only 16,000. So it reduces the 2,33,000 of chargeable amount to 2,17,000. And as we have been given that the tax is to be paid by the donor, what is mentioned here, that chargeable had agreed to pay any IST due on CLTs. So it is a CLT. On CLT, the chargeable means the donor agreed to pay tax. So if a donor agreed to pay tax, the rate of tax to be applied is 25%. So what is 25% of 2,17,000? This is 54,250. Who has to pay by? Chargeable has to paid by due date. We have to consider the due date. The date of gift is 1st June 17. So the due date would be 30th April. Following 30th April means 30th April 2018. What is the gross chargeable amount? Gross chargeable amount is the chargeable amount 2,33,000 plus amount of gift 2,33,000 plus 54,250. So it is 2,87,250. The gross chargeable amount is 2,87,250. So this is about the third gift. Now we have to consider about the fourth gift. The fourth gift is on 1st July 2019 and it is for 21,000 to his daughter. So it means this is again the potential exempt transfer. So it is potential exempt transfer. Date of gift is 1st July and 2019. So the tax year is said to be 1920. Amount of gift is only 21,000. So we have to record this 21,000. Annual exempt amount of current year and previous year has to be considered, because in the previous year 18-19 there is no gift made. So the chargeable amount would be 15,000. As this is potential exempt transfer, so there is no need to apply the nil rate band. So there is no taxable amount, no tax to be paid, who is to be paid by, due date, nothing is to be mentioned. The gross chargeable amount is 15,000. So this is about the fourth gift. Now we have to consider the fifth gift, that is for 1,03,000 to a trust on 1st August 2020. So it is chargeable lifetime transfer as it is made to a trust. The date of gift is 1st August 2020. So the tax year is 2021. Amount of gift is 1,03,000. We have to deduct the 3,000 current year annual exempt amount. Again, in the previous year 1920, the annual exempt amount has been utilized, so there is no unused annual exempt amount of previous year available. So chargeable amount is 1 lakh. Now we have to consider what is the date of gift. The date of gift is 1st August 2020. So 7 years before, the date would be 1st August 2013. 1st August 2013. Now we have to consider whether from 1st August 2013 to the date 1st August 2020, whether nil rate band has been utilized. So this is only this chargeable lifetime transfer which we need to consider. So this chargeable lifetime transfer we need to consider, and the nil rate band utilized in this year is to be considered. And remember that what we have to consider, what is the amount of nil rate band that is to be utilized? No, this is not the amount of 16,000. No, we have to consider the gross chargeable amount, 2,87,250. So here we need to mention first what is the nil rate band. Nil rate band is 3,25,000. In the previous 7 years, it is the only gift on 1st June 2017 where nil rate band is applied. Remember, we have to consider the previous 7-year period. And in this year, no doubt we have utilized a nil rate band of 16,000. But we don't have to consider this. We have to consider the gross chargeable amount in that year. And that is to be taken as nil rate band utilized. So after deducting this, you will get the figure 3,25,000 minus 2,87,250. So it is 37,750. So it is 37,750, which is the nil rate band available. Right? So this nil rate band of 37,750 make the chargeable amount reduced to 62,250 as your taxable amount. And as donor has decided or agreed to pay the tax, so the tax rate will be 25%. So what is 25% of 62,250? It is 15,562. 15,563, you can round it off. Who has to pay? Chargeable. The date of gift is given to you as 1st August 20. So the due date would be the following 30th April. So it would be 30th April 2021. And the gross chargeable amount is said to be the amount of tax 15,000 plus the chargeable amount of 1 lakh. So it would be 1,15,563. So up till now we have concluded the first part of the question, and that is about the calculation during the lifetime of chargeable. Now we have to consider that due to the death of that person, some potential exempt transfer now become chargeable lifetime transfer. So the application of nil rate band will be changed. Application of nil rate band will be changed. So first we have to consider the date of death of that person. Date of death of that person is given or not. He died on 1st December 2022. So if the date of death is 1st December 2022, we have to consider 7 years before date of death. First December 2022. So it means we have to consider the gift that become chargeable from 1st December 15 onwards. Date of death is given to you as 1st December 22. We have to consider what are the gifts that are transferred from 1st December 15 onwards. So if this is a potential exempt transfer, it becomes chargeable, and if it is a chargeable life transfer, we have to again calculate the inheritance tax on death, on the death rate. So first gift is made on 1st September 2012, so it is not considered to be calculated again. Means tax liability on this chargeable lifetime transfer is not to be considered because 7 years, more than 7 years has elapsed or expired, so it is not to be considered. Now this potential exempt transfer, the second potential exempt transfer, it now becomes chargeable. So we have to consider from here. This potential exempt transfer and this potential exempt transfer both become chargeable now. So the application of nil rate band would be different in these years. Remember that on the date of death we have to start from the gross chargeable amount. So we have to start from the gift that become chargeable, that was potentially exempt transfer on 1st May 2016. First, it is the gross chargeable amount, and gross chargeable amount of this gift is 2,57,000. Right? This is the gift on 1st May 2016 that now becomes chargeable. Before that, it was, during his lifetime, it was potential exempt transfer. Again, we have to consider what is the nil rate band. Nil rate band is 3,25,000. But on this date, on 1st May 2016, we have to consider in the previous 7 years whether we have utilized any nil rate band. So answer is that in the first gift we have utilized a nil rate band of 3,09,000. In the first year before that gift, the gift is on 1st May 2016. Whenever the potential exempt transfer become chargeable, we have to consider the previous 7 years of the date of gift of potential exempt transfer to know that whether any nil rate band has been utilized in the previous 7 years. So yes, in this case on 1st May 16 the potential exempt transfer has been made, and before that the 7-year period is from 1st May 2009. From 1st May 2009 to 1st May 2016, we have made a chargeable lifetime transfer on 1st September 12, and in this transfer the nil rate band of 3,09,000 has been utilized. So as 3,09,000 of nil rate band has already been utilized, so available nil rate band is only 16,000. So as a result of this availability of nil rate band, the taxable amount reduces to 2,41,000. Taxable amount reduces to 2,41,000. Remember that on the date of death, the IST payable is calculated at the rate of 40%. At the date of death, the IST payable, IST at death is to be calculated at the rate of 40%. So what is the 40% of 2,41,000? This is 96,400. But as a result of taper relief, the amount of tax will be reduced. Here we need to consider what is the percentage of taper relief. As the date of gift is 1st May 16, so 17, 18, 19, 20, 21, 22, 6 years and some months from 1st May 2016 to 1st December 2022, it is a period between 6 to 7 years that has been elapsed from the date of gift. So 80% relief is to be calculated. So what is 80% of 96,400? This would be 77,120. So now the remaining amount that is to be paid as tax would be 20% or deduct this. You will get 19,280 is the amount of tax that is to be paid. Right? Who has to pay that tax? It is paid by the son, because this potential exempt transfer is made to his son. So son, the name of son is mentioned in the question. He has made that gift to son Alexander. So you have to mention the name Alexander here. Alexander has to pay that tax. And what is the due date? Due date would be the date of death of that person is 1st December 2022. First you have to go to the end of that month, that is 31st December 2022, and then add 6 months period. So this would be 30th June 2023, that is said to be the due date. From the date of death you have to go to the last of date of the month and then add 6 months. So this is the treatment of the potential exempt transfer on 1st May 2016. Next we have a chargeable lifetime transfer, and that is on 1st June 17 for 1st June 17. 1st June 17. And the gross chargeable amount of this gift is 2,87,250. Now we have to consider what is the nil rate band available. So again we have to consider 1st July 17 to 1st in the previous 7 years, how much nil rate band has been utilized. So in the previous 7 years, 3,09,000 plus gross chargeable amount of that 257. So it is total nil rate band is 3,25,000, but how much has been utilized? You have to mention it carefully. 3,09,000 in the previous 7 years, which is already chargeable lifetime transfer, this one, and the gross chargeable amount of the potential exempt transfer that now become chargeable and utilize the nil rate band. Remember again, you don't have to consider the actual amount of nil rate band that has been utilized. You have to consider what is the gross chargeable amount. So 257 plus 3,09,000, this will become 5,66,000. So 5,66,000 of nil rate band has already been utilized. So it means that there is no nil rate band available. So whole amount of 2,87,250 becomes chargeable. What is 40% of this amount? 2,87,250 into 40%. This is 1,14,900. Now we have to consider how much tax on this gift has been paid during the lifetime. No, but before that we have to apply the taper relief. Taper relief is to be applied. The date of gift is 1st June 17 and the date of death is 1st December 22. So it is 18, 19, 20, 21, 22, 5 years and some months. So it means a gap is from 5 to 6 years. So 60% relief is to be provided. Relief is 60% to be provided. So if it is 1,14,900, 60% of this would be 68,940. 68,940 is the relief. So remaining amount would be 45,960. But remember that on this gift already during the lifetime of Charbel, the tax has been paid, and that tax is 54,250. As the tax already paid during lifetime is greater than the tax calculated on death, so it means nothing is to be refunded. Nothing is to be refunded. Now we have to consider the third gift, and that third gift is on fourth gift on 1st July 19, and it was potential exempt transfer. 1st July 19. The gross chargeable amount of that gift is 15,000. The nil rate band is total 3,25,000 in this year as well. But how much nil rate band has been utilized in previous 7 years? In the previous 7 years, the nil rate band that has been utilized is, if the date of gift is 1st July 19, the previous 7 years, the date would be 1st July 12. 1st July 12 is the date from where we have to consider how much amount of nil rate band has been utilized. So this gift, and this gift, all three gifts, whatever amount is here for all three gifts of nil rate band that has been utilized, we have to consider that. So previously it was 5,66,000 that has been utilized. Now you have to add this 2,87,250 of gross chargeable amount in this to find out the total nil rate band already utilized. So it will be 5,66,000 plus 287,250, 8,53,250. So if nil rate band has more nil rate band has been utilized, there is no nil rate band available. So taxable amount is 15,000, and 40% of this would be 6,000. And the date of gift is 1st July 19, and date of death is 1st December 22. So it is a period of 20, 21, 22. The period between 3 to 4 years. So if the period of date of gift to date of death is between 3 to 4 years, 20% taper relief is available. 20% of 6,000 would be 1,200. So it will reduce the amount of tax as 4,800. Now the tax has to be paid by her daughter Jane, and the due date is same, 30 June 2023. Right, now we have to consider the last gift that was made on 1st August 2020, and that is for 1,03,000, but we have to consider the gross chargeable amount of 1,15,563. The gift is made on 1st August 2020. The gross chargeable amount is 1,15,563. And here again the tricky part is to find out how much nil rate band has been utilized. 1st August 20, if we consider the previous 7-year period, this starts from 1st August 2013. From 1st August 13 onwards, we have made these gifts. This one, potential exempt transfer, this one, chargeable lifetime transfer, and this one. And in these three gifts, how much amount of nil rate band has already been utilized? It is to be calculated by subtracting the nil rate band utilized in this first gift and adding the nil rate band that is to be applied in this gift. So 8,53,000 is the nil rate band already we have considered as utilized. So deduct 3,09,000 from this and add 15,000. So it will be minus 3,09,000 plus 15,000. So it will be 5,59,250. Again 5,59,250 means that there is no nil rate band available. So the whole amount of 1,15,563 is your taxable amount, and tax is to be calculated at the rate of 40%. So it is 46,225, the tax liability, and the period of gift to period of date of death is less than 3 years, so there is no taper relief. So there is no taper relief, but on this gift some tax has been paid during the lifetime. During lifetime, the tax that has been paid is 15,563, and remaining tax would be difference of this 46,225 minus 15,563. This would be 30,662. 30,662, and it is to be paid by trustee because this is a gift to trust, and due date is same 30 June 2023. So it is quite tough question. You have to listen it couple of times in order to understand well, especially the part where the calculation of nil rate band has been calculated. Right, in the next lecture we will consider about the IST payable on the death state as well as resident nil rate band.